You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time once again for the Option Block, what the cool kids call the old OB. My name is Mark Longo from the OptionsInsider.com, as well as, of course, on the ever-exciting Options Insider Radio Network. Thanks all of you guys who've been, and gals out there, who've been jumping on the old pro trading legion. It really has been growing by leaps and bounds. It's fun. It's exciting to see so many people who are excited. You know, we were excited when we launched it, but your enthusiasm has just made us that much more excited. A lot of fun stuff popping off. Glad to see so many of you enjoyed our pro Q&A earlier this week with the once and future Dr. Vix, aka Mr. Rhodes. That's up there on the private podcast feed for all of you who missed the live version. And of course, coming up tomorrow, we got another taste, another dose of options oddities. Got another great guest in store for us there as well. So a lot of fun stuff coming at you on the old pro side. Of course, you can join us throughout the week for all these live streams and a whole bunch of more fun stuff. So check it out, theoptionsinsider.com/plus or /pro, whatever tickles your fancy. /shop gets you to both of them, explains what both of them are on one fell swoop. And of course, keep those questions and comments coming, no matter how you listen, live, on the after the fact, whatever the heck you do. Keep those questions and comments coming. We do love to hear from all of you folks out there. And let's see who we're hearing from on the old show today. First, let's go out to the shores of Maine. You know they're dark. You know they're stormy. You know the seas are roiling as we speak, because we're going out to the GIOVINAZZI compound, where we are joined once again by the rockingest of lobsters, Mr. Andrew G. himself. Mr. G, welcome back to the program, sir. How go things in the land of the pit? Any new guest starring roles on your own event, sir?
You know what? I did another one. I did another one. I guest started my own event.
I was just joking. I had no idea that was true. That's funny.
We have a new marketing partner who's basically doubled our business. Crazy. I'm actually so busy now it feels like a job. So I'm not quite sure. You be careful what you wish for with success, as you well know. Yes, we did an event today on short squeezes, hard to borrow, how to look at the market and tell what's going on. That actually will be a webinar that will be available if any of your listeners are interested in it. Send me an Andrew at optionpit.com. Maybe we'll even fling it to you for something to stick on there to maybe behind the paywall, something sassy if you want to learn how to deal with all those hard to borrow days like we did when we were youths, Mr. Longo.
The days of our youths. Yes, good Good stuff. It's amazing, your streak of guest starring roles. It's like Oprah, you know, she's on the cover of her magazine every month. It's amazing she's able to pull off that streak month after month. And here you are doing it yourself, guest starring on your own events. It's impressive, sir.
You know what? It's almost as good as my record in guessing the '80s wrestlers.
That is equally impressive. You know, it's not impressive though. It is Uncle Mike's tardiness. How dare he put clients' needs before this show? So we're going to keep on rolling though, right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show we break down what the heck is trading, what is lighting up our screens out there today. And it seems like it's a bit of a mixed reaction on the old street. Kind of depends where you're hanging your hat, what kind of day you're having out there, because the S&P and the Dow are both feeling a wee bit of red. S&P is kind of fighting to get unched now, but the Dow still firmly in the red. And the NASDAQ saying, woohoo, I'm going north. So S&P about unched, Dow off about 0.6% to the dark side, and NASDAQ rallying about 0.7% to the light side. So again, one of those kind of days. Pick your poison. That's what you're getting out there. It means the vol markets are kind of moving all over the place today. They were giving up the ghost earlier in the session when we saw a little bit more red lining up there. It seems like the vol markets are starting to get a little bit of life. Coming into showtime, we had VIX cash right around the 18 handle. That puts it up about a point from our last show. So everyone who was feeling a little bit more vol on vol views looking all right now. Will it hold for another 24 hours, aka an eternity in the world of volatility? We shall find out. VVIX back up to about 120, which was the former floor of the pandemic era. Now we're back up there again, up about 2.5 points from our last show. VXX starting to turn around. It was feeling the fade again, then starting to turn back to the upside. It was at about 31.75 when we kicked off the show, up ever so slightly from last week, about 0.15 or so, but still not down, which is a big deal in VXX land. And VolQ getting a little bit of an inhale as well, up to about a 17. That puts it up about 0.5 point from where we were this time last show. Of course, since our last show, Mr. Rock Lobster, we have had the Fed grace us with their presence once again. In fact, I was on the Options Bootcamp show yesterday live when the Fed announcement came out, and it was kind of interesting to watch the Fed watch change on the dime. It went from about 93% unched and a 7% probability of them raising rates all the way through the end of the year. Those probabilities held all the way through December to about 83 and 17%. So it swung about 10%, which is kind of interesting. And who knows? I haven't pulled it up today. Maybe it has swung even more. So the Fed adding perhaps a little bit of ammo to this dark side, this little bit of a resurgence of volatility. What has been catching the eye of you and or Volman, sir, since our last show?
Well, so we have, I would say today, wouldn't you call today kind of a hot potato day where everybody dumps all their commodity stocks and buys tech, you know, because everybody's like, oh, you know, rates and inflation. And I don't know about you, but I'm looking at, you know, and I guessed at my own event last week, I thought, you know, and I still think we could see some action in gold, but the reality is gold was trading, GLD was trading 175 for last week when we did our event, and now it's trading 166. So something has changed. I don't know what it is, but it has. So everything, like even remotely sniffing commodity, got beat with the ugly stick today. I'm looking at oil, I'm looking at steel, just, you know, coming way off of those recent highs. You know, I have to say, I don't think it's a bad place to have a little taste down here, which I am doing in a couple of stocks. And the reason why, falls down, right? So ultimately, if vol is down and there's this kind of big churn, that's usually kind of bullish, right? Because people are selling one thing, buying another thing. Net, they're not looking for big overall movement. VIX came off from the Fed thing, and usually there's a bid into the Fed. Again, I write that in our, do like this, you know, daily newsletter at Option Pit, so we keep people kind of up to date on all that stuff for trades and things. And so, like, you know, I mean, on the show, how many times we talked about this? Vol bid into the Fed event, right? You know, establish a little bit of a vol short, buy a couple of VXX puts near the money, maybe some junk calls for protection in case we have a surprise. Like, and I think the Fed was a little more hawkish than everybody thought. Certainly, everybody holding gold in every commodity on the planet. And but the reality is, VIX is 1729. But we're not close to lows of all. So that's kind of where we sit. And I have to be honest, I think we're going to see the 15 handle before the close tomorrow. That's my bold prediction.
Wow. All before the close tomorrow, back to the 15 handle. Interesting. Because a lot of people on our show last week, I was kind of the lone gunman to the dark side. Everyone was feeling much higher vol, including Jim Carroll. And I forgot what the meatball was doing. But yeah, it was crazy town last week, sir. So you're fading all that.
I am, just because I think probably the most, the inflation thing has really, since, the COVID here, there, and everywhere. I mean, places are opening up and the cases aren't going up, but I think there's enough, at least in the United States, there's enough treatment and things to go around. So I think overall, that we're getting out of that COVID wave, although it's still here, undoubtedly. But but we haven't really. Can we get to some lower vol? And that expectation, that kind of downside bid for puts, is still not gone. And we're not even down to the lows of VIX of last week. So, yeah, we're still not there yet. I think we do have a ways to go. But the question is do we kind of break to that new low? You know what I mean? So anyway, and I think that's where we find ourselves. So TOSAW, he can't say his famous line today, but if we print in the 16 handle here today, this slide continues because the vol futures are losing a bid. I expect to see lower numbers, because at this point, if people are happy with the inflation, I'm going to say happy, but I think they have some kind of solution, and if that's now mapped out to 2022 or whatever, that is a big piece of the puzzle that has been removed. And generally, when you take that big puzzle piece out and you have more certainty forecasted forward, at least by the Fed, in general, VIX has not been able to, vol generally doesn't hold up to that. So, lots of stuff can happen, but I think that is a big piece of that's a piece of the pie that has now been solved, so to speak, or at least in the short term.
I just pulled up the vol views from last week to see the crystal ball. I was at a 1605, which was actually slightly higher than where we were, I believe, at the end of last show. Your buddy, the Meatball, he claims he's fading his book going crazy to the upside. I think secretly in his heart of hearts, this is what he's looking at. He had an 1818, so he's not feeling a 15 handle. And Jim Carroll had a 17 half. So I was the closest. I was a 1605. So your 15 handle, if it's like a 1595, looks all right for me, Mr. Meatball. I'm okay with that. But everybody else kind of fading you pretty aggressively. We'll see. We shall see. 24 hours, as we know, is an eternity in the world of volatility. You know what else is an eternity? Is when you're waiting for the uncleest of Mikes to finally deign you with his presence. I do believe he has finally decided to join the program today, as we are joined by one Uncle Mike TOSAW from St. Charles Wealth Management. Better late than never. At least we hope so. Uncle Mike, what do you have to say for yourself, sir? Keeping the good folks of the option block waiting for your presence.
Well, the party can start now that I'm here.
That is true. The party can now begin. The upside, well, not so much of an upside party today, kind of a weird mixed party. But hey, to each their own. Everyone has a different type of party that intrigues them. And what type of party is lighting up your tape today on this decidedly, mostly not Uncle Mike type of day?
For sure. Well, in looking at it, the thing that really lit up my tape a lot yesterday was the fact that shortly after the Fed announcement, bonds just sold off hardcore and stocks sold off. And so oftentimes when both of them sell off or both of them are just bid up, a lot of times there's a reversal in one of them the next day. And so today it looks like the bonds are the lucky winner, because IEF, what I follow, is down fairly significantly for IEF. Yesterday, we got down to roughly 114.30 at one point in time, and that's down from the roughly the low 115. So it's a pretty significant move in bond land. So I guess if anyone says the words inflation or potential rate increase earlier than we think, then that kind of spooks bond people. And they're like, I don't want to be in this. And so they get out of it. Stocks were going down as well. So with that, the four major asset classes that exist, when you have money has to go somewhere. And so usually when we have all the asset classes going down, if we have stocks, bonds, and commodities all going in one direction, then I have a hard time believing that that money is just flowing right to real estate, and everyone's just buying houses with all that money. I just have a hard time believing that. But what does often happen is that they're usually the money shows up somewhere. And today it is showing up in the bond world. 10-year note is up nearly half a percentage point. And so we did get a little bit of a reversal there, and a pretty significant reversal there. And stocks are just flat right now. So it's going to be interesting to see over the course of the next few days, in particular the weekend, as to how markets react to this and what the Feds are doing to seeing if the markets see how the market digests this. Now it has some time to take a look at it. But in terms of what's moving today, I think Andrew said it very well in terms of everyone's getting out of commodities and then they're buying tech, but they're also getting out of financials. If you look at XLF, the ETF that tracks the financial sector, that's down 2.5% today. And the fact that that's down 2.5% when the market itself, or the overall the S&P 500 is flat, I think that's pretty significant. So that's where this is coming from. And if we did get commodity stocks, or as well as like XLE, for example, the energy sector, as well as the financials to come on board with this, then I think we could get another rally going. But the reality of this rally is that we are still very close to all-time highs on a day when you have energy down 3% and financials down over 2.5%. It's really does show some strength to this market in general. And is it strength for the economy? Well, that's a debate for another show. But for the market itself, just when you have I'm just looking at my sector screen here, roughly half of them are all red and the other half are in the green. When you have something like that, it really does say a lot for what's being able to hold up this market. And right now, technology is definitely something that is holding up this market today. In terms of the VIX going to 15, I'm going to be waiting with bated breath for that one. Andrew's usually pretty good when he says something about the VIX, so I'm going to be excited to watch that, to see the VIX dropping that amount, if indeed it does happen. So watching that as well. And then finally, my beloved silver, I'm in a risk reversal on that, or a modified risk reversal on that. And then my short put doesn't come in till 20, so we're still fairly safe with that one. But with where we're looking at it right now, it's definitely a significant drop in silver, nearly 5% on the day. So we got a lot going on today, and it's just gonna. It's probably one of the most interesting market days where the S&P is down 2 points that I can ever remember, quite frankly. Normally, when the S&P is down 2 points or flat like this, not a lot going on. But today's unique in that there is a lot going on, and the market's not really moved.
It has not indeed. But you know what is moving is a lot of the single name options. We'll get to those in a second. First, let's start in index land, see how much paper you folks are actually putting up on ye old tape today. The VIX, it's kind of shrugging its shoulders today. The ADV has also come in substantially. I was kind of expecting that. It didn't seem like it could hold that level above 600K when we've seen a lot of these days, 200, 300, 400,000 consecutively out there. It didn't seem like that 600K could hold up, and it didn't. It's back down to 538,000. That's off substantially from earlier in the week. Right now, 346,000 contracts on the tape. We'll see if it can get there today. SPY, 2.65 million right now. That ADV pretty much across the board has come in on pretty much all of these major indices. Of course, maybe some of today's paper might push them back in the other direction. The ADV in SPY right now is only 3.63 million. So SPY on course to hit that. That's off substantially. It was well over 4 not too long ago. The S closing in on 1 million contracts already, 946,000. That's a lot of paper for the S. The ADV is about 1.21 million out there. So I got a feeling that's going to be ticking up The Qs already have 1.4 million contracts on the tape. Their ADV has fallen off. It's down to about 1.14. They've obviously blown through that already today. So Rampage ahoy here for the Qs. And, similar story out there in small caps, nearly 700,000 contracts on the tape right now out there in IWM, at least. The ADV is under 500,000. That has ticked down as well, 494,000. So they're blowing through that today. Rampage kind of day leading into the coming recon. We're going to get into all of that a little bit later today on TWIFO. Going to dive into small caps recon. They're selling off like mad today, up about 1.3%. So they're leading the charge to the dark side right now. So a lot of small caps on the tape. What's going on out there? What does all this mean from a vol perspective and everything else? Get to all of that in a little bit on TWIFO out there. By the way, I see you out there, Mr. Unlimited, with your, hope you talk about metals. I think we can squeeze some metals in for you too over there on TWIFO. By the way, I did just notice your Twitter icon is Lion-O from the Thundercats. So you all automatically bumped to the top of the list for me now forever. That is hilarious. I think the only thing you could probably top it with would have been maybe like a Motu thing, and that would have been perfect. But I digress. Let's go on out now to the top 10 most actives. This is when kind of a lot of the interesting developments have been going on in the option space of late. Let's see if today's another day where all these crazy meme kids, the Clovers, the Rocket Mortgages, the AMCs, maybe Ford. Is that a meme kid? I guess we'll find out. But let's see if those can topple the titans, the juggernauts that are Apple and Tesla. The answer a lot of days lately has been yes. Let's see if today is another one of those days. By the way, it cost you nearly 250,000 contracts, 246,000 contracts to break into the top 10 today. It gets you all the way to Palantir. Palantir just barely managing to cling to the top 10 out there before getting kicked aside. So, it's a pretty active day when Palantir can't even hang out there. Number 9, Amazon, 342,000. We're already jumping up quite a bit, and we're already at number 9. Number 8, Bank of America, 365,000 contracts. Number 7, we're only at number 7. We're already at 422,000 contracts. It's a pretty active day. That gets you to NEO, 422. That only gets you number 7 today. What could beat that? Well, it's number 6. It's Ford. Is it a meme name now? I don't know. I put it to you, listeners. 478,000 contracts on the tape out there right now. So a pretty good day, at least from an options volume perspective out there in Ford. Not so much from an underlying perspective. It's been kind of struggling to hold those higher levels. In fact, it broke through the 15 handle recently. Smecco's rallying back up now. It's given up the ghost again today, off a little over 1%, back shy of the 15 handle. So spoiler alert, those June 18 calls that we talked about on the show a few weeks ago, not looking so good right now. At the time, I think they went up around 20 cents. I think at the time we said, I think we'd probably rather do that covered call. And that definitely seems like that was the way to go, unless we get a very aggressive move in Ford by the end of the day tomorrow. Not looking so bueno for those Ford calls. Number 5, NVIDIA. A lot of action on the chip space yet again. 506,000, 500,000 contracts already. For AMD, we're already at number 5. Number 4, it's Tesla. All the way down to number 4, listeners. That's the kind of rock'em sock'em robots day we have on our hands. 835,000 contracts. That's only good enough for number 4. That can't even topple the top 10 stalwart that is AMD, fighting its way all the way up to number 3 today with 868,000 contracts. AMD on the rampage today, up a little over 5%, nearly 5 handles out there today, about a little shy of $85. A good day for them. Looks like they're doing a deal there with Google to power some of their cloud with AMD chips, and that's driving the stock up and driving a heck of a lot of AMD paper. Then we get to number 2, listeners. It's the king of the memes right now. I think they have stolen the crown from GameStop, at least for the foreseeable future. It's AMC doing yet again another robust bit of paper, 1.13 million. How many of those are those 145 strike calls? Had a good conversation about those yesterday on Options Bootcamp. If you missed it, listeners, check it out. It's interesting. I know they're so tempting. You want to sell those 145s for whatever, 30 cents up to $1 and change. Those things were trading for crazy levels. And yet your broker's jacking up the margin at the same time. So not quite as tenable of a trade as it was, let's say, a week ago. But still good for 1.13 million contracts. Number 1 with the bullet. It has retained its crown with a pretty aggressive volume. It said, hey, you meme kids, get the heck out of my way. This throne is mine. It is Apple, up about not only 1.5 points today, so it's not really an underlying movement that's doing it, but it is doing some numbers today. It's like everyone collectively rediscovered Apple in the options world today. 1.43 million contra. That's roughly 2 to 3x the kind of numbers it's been doing of late. So that's back to the old Apple. That's impressive and good enough for a firm stamp, a death lock, a chokehold, if you will, on the number one position. Let's really quickly see how the biases are shaping up out here. Looks like our most biased paper is only 80%. That's on Ford to the call side there. Everybody else is around 70% there. So interesting stuff afoot. Let's look really quickly on the earnings front. These coming in right as we speak, hot off the presses from our friends over there at ORATS. You can check them for yourselves. If they're not live now, they'll be live very soon over there at theoptionsinsider.com. Click on the options news and article tab to get off to the races. Still some names popping off this week. We had Oracle, H&R Block, and Lazy Boy on Tuesday, Lennar Homes on Wednesday, Kroger today, and we've got some move results reports for a few of those there. We got Kroger here. It looks like they popped off just today before the bell. 37 doubles where they went into their announcement. They were pricing in 4.4%. I can already see the writing on this wall. It doesn't sound like they're going to make that. And they did not. They only moved 1.8%. So once again, the sad trombone plays for an earnings announcement. Let's go out to Lennar Homes here. They were yesterday after the bell. 91 1/3 is where they went into their announcement. They were pricing in 4.7. Sounds kind of lofty in this environment. Can they make it? And the answer is once again, no. They only delivered about 3.8%. So once again, we are missing our earnings vol announcements. That means our season, once again, is shaping up right around a 74% listeners. So a little bit up. It was 72%, I think, about a week ago. So it's ticked up ever so slightly, but still a bit of a bloodbath. I'm looking at the numbers right now. That 74% average last week, 62%. Before that, 96%, the best week of the season. Then 81%, then 65%. Then the week before that, 51%, the worst week of the season. And then we kicked things off with a 78% week. So yeah, once again, listeners, not exactly looking like vol buying is the thing to do. But you know what? Just wait a little bit. We'll get another earnings season under our belt. And perhaps we can do this dance all over again and try to decide if this is it, if this is the time when earnings vol will matter again. Let's look forward really quickly as well. I know the meatball isn't here, but one of his favorites is Darden Restaurants. They are popping off next week on the 24th. They were at a lofty 136.5 as of this report. They were pricing in $7.57. They've obviously gotten the memo because in the past they've moved about $10. So they realized less is more when it comes to earning vol. Rad, good old Rad, aka Rite Aid. They're on the 24th as well. 21 1/3 is where they were as of this report. They were pricing in $2.62. In the past, they've moved 3 1/4. So yes, they've gotten the memo out there as well. We've also got Adobe after the bell today. They were at a precious 543 1/3. That's lofty for Adobe. They were pricing in $16.79. In the past, they've moved, get this, listeners, 25 and about a half. So they have annihilated the volatility in Adobe. Is it because Flash is gone? Who knows? Either way, Adobe has no more vol left. And yet, let's see if they can make that little bit of vol they have left here work. Listen, if you're wondering, 30-day vol out there is at about a 28 compared to an 84 for Rite Aid. And a Darden Restaurants has about a 38. You guys can check all that out for yourselves. TheOptionsInsider.com. Now it is time, listeners, to get weird, to get wild, to get wondrous. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, it is time to unleash the Eye of Sauron. See where it fixes its gaze today. And first off, Mr. Rock Lobster, this is a good one. You'll like this one. I'm sure I'm butchering this pronunciation. Qudian, perhaps. Qudian, Qudian. This is an ADR out of China. I love the description of this. It's just a company. So if you're wondering what they do, they are a company, though I do believe they do some financial leasing and a few other things. They're trading 264 right now, ticker symbol QD. They had a good run over the course of the past year. Today, actually a decent run today, up 7.33% today. So a decent little pop for them today. A year ago, they were trading $1.72, so almost a buck shy of where they are right now. And over the course of the year, they kind of languished down to like $1.25 or so. And that was till January of this year, pretty much, until they really didn't pop until February this year. They had a nice run all the way up to $3.64, so exactly $1 north of where they are right now. Then they kind of gave that up to $2 on March 9th and right back up to $3.17 again on March 17th. And then they kind of sold off again to $1 and change, where they've kind of been languishing and up to about $2 until this past week. They've gapped up from $2.10 all the way up to where they are right now, $2.64. So it's been a good week out here for Qudian, which is a company. Let's see what we've got going on out here. Looks like they had earnings. They missed by a cent a couple of sessions ago, but clearly the market didn't mind it because they've hoed them. And Mr. Rock Lobster, let's see what our Eye of Sauron found out here. It's kind of a weird one. So the first thing it found for us was a big block of 10,000 of the AUG3 puts. So these are $3 puts. Good thing the Viceroy is in here because he would just shake his head in disgust at these. They went up for 70 cents, lifting the offer 10,000 times. So yes, 70-cent put on a $2.64 name, going out nigh on a month, a couple of months here for 70 cents. So that struck us as odd, hence the odd block. We thought maybe let's look really quickly and see if anything else could explain that a little more. And there is a bit of a put palooza actually going on out here in good old Qudian today, because we saw 20,000 more of the AUG3 puts going up for 65 cents. Then we saw 20,000 of the June. It seems like someone's doing the old June to July roll, because we saw those puts going up for 45 cents. So they paid 20 cents, around that range, 20 odd, 25, maybe up to 30. We'll see. 20, and at least 20 cents on this roll a couple of times here. Let's say it's just at 20 for now. But still, they did it a pretty impressive number of times. I think the total number is about 55,000 of these bad boys that they're rolling. These puts are obviously in the money now, so that makes it a little bit more intriguing. Mr. Rock Lobster, there's all sorts of madness afoot in this name. It's a $2.65 name. Had quite the aggressive run-up of late. Someone's deciding to draw that protective line in the sand, it seems like, at the 3-strike, and doing it for size, roughly 50-odd thousand times, for prices now ranging. They're keeping the party alive for another 2 months for 20 cents. A $2.65 name. This is all sorts of crazy. And also, it's an in-the-money strike to boot, which is, as the Canadians like to say, which makes it equally fascinating. What are your thoughts on this crazy in-the-money put roll palooza here in everyone's favorite name, Qudian, which is, in case you're wondering, a company, sir?
Well, do you remember not very long ago when all you needed just to be was a Chinese company and the stock would go to the moon?
Now you just have to be a company. That's all it takes.
Yeah, I was just like, it just had to be a Chinese company, just a Chinese company. I think people are a little pickier now, but not much, to be honest. They actually have an online customer credit technology platform. So maybe it's sort of some sort of a credit lender sort of thing, where interesting. You never can believe any of the stats, but I'm looking at this I'm finding this a little interesting from a volume point of view, exactly, because it doesn't make a lot of sense, Mr. Longo. You know,
hence the odd block.
Why do you kind of load the boat here on these puts? It's a little bit of a head scratcher for me on the two. You know, like, this is a fairly good size. Now they're saying I'm seeing multi-leg FLR traded on the floor. Pricing really seems to favor the buy the put side. I haven't looked and see if any stock went up. But like, why would you even bother? Why would you bother buying the $3 put on a 265 and buy stock? This is all kinds of head scratching to me. But another thing that's even, okay, let's go even odder, is maybe, just maybe, do you think this was just closing paper? Maybe somebody was short these puts and are just buying them back? Just looking at the big open interest, that's the only thing I like. Somebody maybe just, I think maybe they don't want to take the stock and they're just taking they want to buy their puts back.
The AUG leg,
like as of right now, the stock really is kind of launched a little bit.
Yeah, the AUG leg is opening, so we know they're opening in August. I think so. Then it looks like they're closing in June, so it does seem like it has the whiff of a roll about it.
Okay, so all right, so I totally I can't even. My gosh, I said, Gene, send me the show notes, and then I get the show notes, and I can't even read the difference between. So okay, let's just say it is definitely a roll, but again, same problem. It's a dumb roll.
That's the best part of it. Yes, that summarizes it. It is a very dumb roll.
I mean, because they're net paying like 40 cents or something. I'm just doing the synthetic, right? So if they're paying 25, 30, 35 cents for the synthetic for all you at home. See if you can figure this out, right? But for the it's like versus the current prices and where they rolled it, they're paying like almost 30 cents. On average, I think, for the July 3 call synthetically, because they buy them one put and then they're closing, and then so because they're buying like a net put in stock type of trade, which is essentially kind of what they're doing, and they're paying like quite a bit of money for that. So I get 70 cents. 70 cents over 50 is about, the average price is 20 cents, right? And the July 16. 3 calls are 15 cents. So the liquidity provider is net selling the July 3 call. That will really mess people up. I'm sorry, the August 3 call for 20 cents. So this is actually a head scratcher on this one. So from the liquidity provider side, it looks rough because that's going all the way out to August, and they have to sell that August 3 put. So, when you look at it from that way, it doesn't look as dumb, actually. I'm doing a total reversal in my opinion on this trade, because the buyer looks like they're walking into those August 3 calls synthetically for potentially a better price. Because they're anyway. So I know they're buying puts, but when you buy puts and you buy stock, that's a synthetic call. And I realize it's a roll, but that's how it's priced. It's priced like the customer is paying 20 cents. I know it sounds confusing, but that's basically what's happening. So, and they're 25-cent bid. So again, odd, and the vol is down like 6 or 8 points in that month. So I don't know. I'm confused, but I think paying 20 cents for the August 3 call synthetically is not a bad purchase. I'm going to say, okay, I'll leave it there. That's it. Done.
It is a 102 vol, if you are inclined to wonder, listeners, which is a pretty lofty vol. Yeah, if you look at it where the AUG 3s are offered, it makes it look a little bit better. I still lean on the dumb roll for a lot of other reasons. It's a crazy lofty vol level. You're getting for a little bit better level than the already ridiculous level you can go buy it in the market. I have to probably assume there is some stock leg with it. It was like 267 was what stock was when these went up. I don't have any info that it was done tied to stock, but you could probably maybe assume a little bit of stock going up with this. Either way, it's a weird one. We're going to come back to this one. Do you think it's a dumb roll? Are you starting to maybe change your tune out there like the most capricious of rock lobsters? Wherever the wind blows, he goes, listeners. We shall find out. I'm going to keep my it's a dumb roll just for fun, because I will draw my line in the stand. I will go there this far and no farther. Before we do that, though, let's go back actually a little bit. Not too far, because just the last show, we were talking about this newcomer to the odd block, which was Leslie. They do, Leslie's Retail. They do pool supplies. And we were talking about what a surprisingly volatile market they were in for pool supplies. And we profiled last week 12,000 of the July 22 half puts going up for 14 cents right on the bid. That was about a 46 vol. So again, pretty rich for a pool supply company. Well, it looks like Leslie is back. And once again, in our premium harvesting category, a little bit less size this time. By the way, Leslie's off about $1 today, 91 cents, 25.5. So again, the volatility making itself known here in the pool supply. Who knew chlorine and pool maintenance was such a volatile business? So we won't go through the sordid history of Leslie. We did it on our last show. But it looks like someone coming back out again, firing on all cylinders yet again today. 4,888 is what our Eye of Sauron found of the AUG 30. So we're going back to the upside this time. AUG 30 calls for $1.20. This was actually through the bid. Someone wanted to get these off so badly, they crushed the bid by about a nickel. They were bid $1.25 at the time. And the stock was $25.68, so a couple of cents north of where it is right now. This is even higher than last week. This is a 62 vol out here, so this is even more frothy for the pool the pool supplies sector. By the way, there is some earnings juice baked into that. There are earnings on the 4th of August after the bell, so you're getting a couple of months on this one. $1.20. I forgot where we tapped out here over the course of the past year. The high of the year was $32.84, which it hit not too long ago. It hit that level right around, hit a couple of levels near that. Well, just on June 7th, it was 31.25, and it also hit high levels back on January, about 31 up to 32 and change. So it has flirted with those levels very recently, and yet our friend here deciding, I'm going to write the 30 call. He just couldn't resist, Mr. Rock Lobster, that juicy 62 vol. So once again, the surprising amount of juice to be found, sir, in pool supply company Leslie. This is your favorite. What do you think of this? I guess you can call it fairly aggressive covered call, sir.
Yeah, look at this too. Look at the like this stock only a couple of weeks ago was $31.50. Even when we profiled onto the show, remember, I think what were they buying a September call when we profiled on the show? And now
when we profiled it on the show, I think they were selling puts. I think I just broke it down. They were selling July puts, I believe. I just had it up.
Oh, they were selling July puts? So it's getting a little testier then. Because here, so the buy rate on the August 30s, yeah, I mean.
They sold the July 22 half puts 12,000 times for 14 cents. That was near the bid, and it was a 46 vol. Yeah,
well, that's actually become a little bit more. That's now those are 30-50. I can see the open interest. So the 22.5 puts, yeah. So I mean, they're still okay, but they have a nasty mark on their puts currently. But I don't think the buy rate's a bad idea. Like I'm trying to do the same thing in a stock called ALB today, in the rare earth and the lithiums and stuff. So I don't want to go all in, but I would do like a more aggressive buy rate because it's a stock I like to buy on dips and stuff like that. So I think that type of buy rate isn't bad for stuff that you want to add to your portfolio. And the at the money premium that's a pretty decent amount. What is that, 5% to sell the 30 call? That's not terrible,
To quote the Rock Lobster, not terrible. Let's wrap it up here with this one. Let's go back a little bit, listeners. All the way back almost a month to May 20th, to be precise, listeners, where at the time we profiled what looked like some call love in AES Corp. This is in a utility, an electric power company. At the time we profiled paper coming in, buying the June 26 calls for 60 cents, 5,000 times. They were lifting the offer. It was about a 29, almost a 30 volatility. And at the time, we've talked many times here, listeners, about, the buying the premium. When we do see people do it, it's usually outlandish, like those Ford calls for 20 cents, $4 away and all this other stuff, or AMC 145s. Usually the premium buys we profile are pretty outlandish. By comparison, these June 26s weren't that outlandish. At the time we said, we've seen worse. We don't hate it. We don't love it, but we don't hate it either. We've definitely seen worse on these. So both the Rock Lobster and I think we're kind of like, we've seen worse. We're terrible. This guy might have a chance. And let's see, there are earnings, but they're on August 5th, so outside the lifespan of this option. And it seems like, listeners, this guy is going to have to go through into expiration, kind of playing the old biting the fingers game, because the stock right now is almost at exactly 26. It's 25.98, up about a quarter just today alone, about 1%. So this thing has flirted with this strike at least like a few times, but now it is very close to flirting with, let's see it high. It got up to 26. It did break it back just a couple of sessions ago. So it sold off, and that was kind of the closest he got. Other than that, back since the 20th, The stock kind of, at the time when he put this up, the stock was 25.41. And the stock rallied up to about 25.70 on the 24th, and that was kind of 25.63 on the 1st. And it's flirted with it a few times. It also broke the 25 handle in the other direction back a little bit later than that. So it's kind of had a little bit of vacillation out there. So our friend here never really got the big pop he needed to really make a home run. Now he's probably hoping to salvage some pennies on these bad boys because they are still open. They were trading coming into today's show around a nickel to a dime because we're literally at the strike almost exactly. So he might pin right there, in which case that nickel bid's probably going to persist for a while out there. So if that's the case, if they go out worthless, he dropped about $300,000. If he gets him off, he decides to just say the hell with it and get a nickel. He obviously saved himself a wee bit of cash out there, but still. It's an interesting one. Unfortunately, it did not go his way, Mr. Rock Lobster. He did not get the immediate pop. But then again, he still has a day left. So we're pretty much right at his strike as we speak. We get a nice little hefty pop in AES tomorrow. And man, who knows? Maybe this guy's laughing all the way to the bank, sir.
Well, there is one more day. I did get bailed out on some puts I owned in the euro and FXC yesterday. Of course, I wish I would have waited one more day because I didn't realize the pile on to sell the euro. So that would have been a couple extra bucks. However, there is a shot here for these, right? There's like a shot, but I'm just saying right now, it does feel like a road to Palookaville. Although, I mean, we have seen it happen. But I don't know. I think all this, like, I think the whole utility sector with inflation and rates going up. I mean, the utility stocks generally go. I think somebody might have put a little bet on the come side here for utilities and the Fed, and it didn't. I don't think it doesn't look like it's panning out, at least right now. So I think they got a shot, but I think they're in. I'm not going to say miracle land because it's 50 delta, but it's going to take a bit of a move to get there.
Look, a little craps reference for you. I didn't know you were a craps aficionado, sir, out there. Interesting stuff as we keep on rolling. You know what else is interesting? It's your mail. So let's get to it with the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. You guys know the drill. Hit us up on all the usual outlets. If you're part of the member squad there, the Pro Trading Legion, you get bumped up to the top of the list via either the live or via the members hotline out there, just like Luigi's. Luigi's fading you, Mr. Rock Lobster. He said, not sure I can throw a VIX put down because the Rock Lobster predicted it. So he was going to buy some VIX puts. And then you said we're seeing a 15 handle, so he canceled his bid, sir.
You know what so he's a guy, Luigi, he's got vowels in his name and he's dissing a fellow Italian. So I don't know. I'll say I don't know about that. We might have to give him a kick out of the club, but I am noticing some lows and balls for the day as I speak, although we're about to break 17, so we'll see. But I know Luigi might have to eat his linguine after this one.
We shall see. Luigi versus the Rock Lobster. One shall stand, one shall fall, to keep the 80s metaphors going. Mr. Unlimited also, yeah, he likes that. I do like your, speaking of 80s, I do like your Lion-O image there. He said he heard China sold off a lot of metals. He hopes Ford is a meme stock because he bought a few hundred of it around 12.5. Well, good for you, Mr. Unlimited. I think we'll get to more about the metals and China maybe dumping some of those a little bit later here on TWIFO. But you're right, there is some news out of here of China perhaps tapping their core reserves. The narrative for all of these raw material type commodities has always been what's Chinese demand, because that's kind of what's the price of that commodity. Are they buying it up? Okay, it's rallying like copper and other things. Well, it sounds like maybe they're releasing a little bit, which could indeed ease some of these price pressures we've been seeing across the board here. So I think we'll get to more of that a little bit later on TWIFO when we break down what's going on in gold and maybe some of the other pressures. Maybe copper. We'll see. I haven't looked at the movers and shakers yet. We'll see what's moving and shaking out there. I know we will be diving into small caps, though, because they're selling off quite a bit. All right, let's go up here. Mr. Uncle Mike, this is for you. So you come late, you still get a question. How nice are our listeners? MTZ wants to know, does Mike ever use stock swap strats? If so, what are his conditions and criteria? So I'm assuming he means the old stock substitution, Mr. Uncle Mike. And if so, how do you like to set them up? How far out do you like to go on the put? On the call? And how far maybe out of the money do you like to go on, let's say, the old covered call leg? If you like to do it, break it down for us, sir.
The old diagonal spread. I actually haven't done that in a couple of years, and the reason is that when doing that, you typically need a lower volatility environment, in my opinion. And so you'd think, oh, okay, well, we just got out of one with President Trump. He was the single-digit VIX president that we joke about on the show, but my problem was with him is that the market just went up too much for me to actually do them. So I ended up just buying a lot of calls during his time frame. And so it was kind of a different time for me as it was for all of us. So with that, though, first thing that I like to look for if I'm going to do that strategy, which I refer to as just a diagonal spread, I like to have a lower volatility environment. And the reason I like to do that is that when you buy the longer term option, you're locking in lower implied volatility. You're buying lower vol. Now, what is low vol? To quite the viceroy, volatility is low only if you think it's low, and volatility is high only if you think it's high. Just because me, Andrew, or you, or someone on TV or whatever say, oh, volatility is low right now, it doesn't mean it's low. It's only because it can always go lower and it can always go higher. So I have an understanding of that. Typically, if I were to look at, and it's like I said, it's been years since I've done this because now we're not in a low volatility environment. And when we were in a low vol environment, I was just too darn bullish. But years ago when I did these, and I might start doing these again if we do have the VIX drop a little bit more, and I could come back to these. But typically what I would do is and like I said, it's been a long time since I've done these. I like a good old-fashioned in-the-money option, something to where maybe a 60-70 delta, and I like going fairly out of the money with the short premium, meaning that I want to make it so that if we do have a little bit of a rally, I get to participate on it. And the time frames I like to use are usually around the 6-month, 1-month time frame. But like I said, when and if I start doing these again, that could change. So I like to go in the money and go out of the money as far out as I can to where I still have theta working in my favor. So in other words, day in, day out, if time decay is working in my favor with this, then I like to go out pretty far because I want to be bullish on this. But I don't want the short leg to hurt me. I want to use as little delta as I can to stand in the way of it. So long story short, roughly 6 months out for the long leg, 60, 70 delta on the long leg. On the short leg, roughly 1 month out, as far out of the money as I can get it to sell it to where I am still getting time decay working in my favor on a daily basis. And that's what you have to monitor that every day, quite frankly. And then I like a lower volatility environment. So it's probably been about 8 or 9 years since I've done this trade, but that's how I did it. And that's likely how I will do it if and when I do it again.
There you go for who was that MTZ and everyone else who's asking about. These are interesting times. We have been talking a lot more about this strategy. It seems like of late. It came up, I think, on boot camp the other day. Came up, I think, earlier this week on our pro Q&A session with Mr. Rhodes. He kind of likes this strategy now as well. It's an interesting one, especially if these names you're looking at are pretty lofty from a valuation perspective, and a lot of the underlyings are. Vol has come in a wee bit of late, so they are more attractive, as Uncle Mike was laying out. And also, if the worst comes to pass, you get these downside turnarounds. You're laying out less money. You're buying the call as opposed to the underlying. So that's a much more favorable trade when it comes to the downside. And of course, you still get to play to the upside as well. And you could write calls and listen to OPR. Brian goes on for days about his various flavors of what he terms the fig leaf strategy. A little bit sexier than what Mike just calls a basic diagonal spread out there. But these are interesting times to start, I think, evaluating that strategy a bit again, particularly if you're a little bit concerned about wading into these waters full hog and going out and gobbling up a bunch of these underlyings and getting really long. Instead, that's a way to do it and still keep some of your money in reserve for a rainy day. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. It is time to go around the block. Time to tell you what we're keeping an eye on here until our next show on Monday. Of course, that's for these scrubs. For me, I just keep on rolling. We have TWIFO later on. We have vol views tomorrow, options, oddities, a whole bunch of stuff between now and Monday. But I digress. Let's go back around the horn to the rockingest of lobsters. Mr. Rock Lobster, sounds like you're keeping an eye on that 15 handle out there in VIXland. Is that what's fixating you until our next show, sir?
I'm going to say there's a little bit of fixation. Of course, right when Luigi put that note in there, I think VIX just hit the ground and popped straight up again. So
it's fading you again.
I'm never going to hear the end of it from our listeners. However, VIX is bouncy, but as far as I can tell, the vol futures really aren't. So, although they're coming off the lows. So we'll see what happens. I'm a patient person. But as that's really, and also how this commodity thing shakes out. I think this was kind of a surprise. I feel like some people are holding the bag a little bit somehow, and we'll see. But I think there is an opportunity there, and Mr. TOSAW's beloved silver, all those things. Again, I think there is still. I will buy something today. I don't know what. I'm actually trying to acquire some of that lithium stock stuff, sell some out of the money puts. But I think it is a little opportunity in some of these commodities today. But I'm not gonna run in there head first and get my you-know-what cut off. So I will tiptoe. So commodities and vol, that is what is lighting up my tape.
There you go, Mr. Uncle Mike. Same question for you, sir. What is lighting up your tape today? Or not? That's what is lighting up your tape until our next episode, I should say, sir.
Well, definitely looking at silver and the commodities, seeing what's going on there. That's something that's lighting it up. The magnet seems to continue with this 4,200 level in the S&P. So we still need to we have not had a significant breakaway from that in a while. And of course, I'm hoping we will to the upside, as I always hope. And then, of course, watching bonds. We've had some pretty exciting movement the last couple of days, depending on what you consider exciting. But in the bond world, it's exciting. So definitely watching that as well.
Yeah, exciting and bonds, not usually synonymous. I'll give you a sneak peek here for all of our live listeners. I'm looking at the movers and shakers report right now, listeners, coming up on TWIFO. Weirdly enough, I don't see a lot of metals on there. I see a lot of other commodities action moving, and we'll get to all that fun stuff in a little bit. But tell you what, since you asked so nicely, we'll see if we can make it happen for some metals on the show coming up. Of course, that'll be in exactly 30 minutes. We're actually going to have to, looks like we'll have to shut down the live for a little bit so we can rejigger for our next guest on TWIFO. We'll be back live in exactly 30 minutes for all things TWIFO futures options out there. But before we go, let's go back around the horn. Let's start with the Uncleist of Mikes. If people are intrigued, they want to talk about stock substitution or anything else in these markets, sir, where should they go? What should they do?
Well, first off, follow me on Twitter at Mike TOSAW, TOSAW, or check out my website, stcharleswealth.com. I am a financial advisor, and I delve in the option product. And, I've kind of made it my livelihood for pretty much my whole adult life. So love to have a conversation with anybody. Love talking to Options Insider Radio Network listeners. Always love it. Contact me.
They are a fun bunch, outside of maybe a couple of them here who like to give the Rock Lobster a hard time, which is also fun in and of itself, Mr. Rock Lobster. If our listeners want to give you a hard time personally, where should they go? What should they do?
Come on over to optionpit.com, sign up for one of our classes in our membership areas, put your option learning on, and we'll see how it goes.
We will see how it goes indeed. And on behalf of the rockingest of lobsters, the Uncleist of Mikes, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in all of your many and varied questions. Remember, we want to get bumped to the top of the queue. Head on over there to theoptionsinsider.com/pro/plus to learn more, get access to that cool members hotline, a whole bunch of other cool stuff. We're back again, like I said, in exactly half an hour. We're going to rejigger the live, so we're going to shut it down for a little bit, but we'll be back live in exactly a half an hour to talk all things TWIFO. Will metals make it on there? Probably. I'm a nice guy, as well as a bunch of other fun stuff. Back again tomorrow, Vol Views, noon Central, 1 p.m. Eastern. Then after that, for all of our Pro Legion out there, We've got Options Oddities coming up right after that. Going to have a fun guest joining me for that one to break down some fun, interesting, maybe different, unusual activities. So stay tuned for that. If you're on the pro side, you can listen to that one. Then, of course, we're back again on Monday. Another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.